What will the stock market do in 2023? Are we really in for a stock market crash here in 2023? Well, this is a part of a series. I actually did a video 2 weeks ago that was titled Stock Market Crash in 2023, Time to Buy. So I'm going to put a link to that in the description below. I encourage you to go look at that. But look at it after this one. You can stay here first and then go back and review that one if you'd like to. So I'm actually bullish. I'm still bullish. So what I did here, and let me go ahead and show you exactly what I'm referring to and why, and give you the details, the data, the stats, and actually, this is not just my opinion or a feeling. That's for sure. I'm actually basing this on evidence. All right. Doesn't mean I'm right. Because, let me make it very clear, nobody knows what the future is going to be. I do not believe in stock market predictions. I hate that term when it comes to trading or investing. But I put together pieces of evidence, uncorrelated pieces of evidence, objective evidence, kind of like a legal case almost. And then that puts a probability on my side. I take the trade and I manage my money. And that's going to be one of the key components of today's video is how I manage my money on the last trade and how I'm looking or what I'm looking for to get in on the next one. All right, so the foundational piece of information that we were looking at was this index right here, the SPXA50R. And in a nutshell, what that means is it's measuring the percentage, and over here on the right axis, you'll see percentage, of how many individual equities, stocks in the S&P 500 are below the 50 SMA. And traditionally, historically, I should say, when we get a large percentage of the stocks below the 50 SMA, that's time to start looking for a bounce, to look for a bottom. Now, how long that will last, that varies. We talked about that on the last one, but this is where I was looking at it in the last video. And you could see the last time when we came down here, the market went up. The last time it got even lower. The time before that, it got even lower. And every time the market moved back up. However, as I talked about in that video as well, it's a zone. This is not a precision type of, it's not an indicator, by the way, it's an index. And it's not a precision index. It gets you into the zone of about maybe a few weeks. So you can see with all of these, well, this one was pretty much just a very much vertical bottom and right back up. But with these, again, as I've covered it here, you can see it lasted for a while. This too, a zone. Okay, and then this one, it came back down and went up. Now, in the lab, I'm not going to review all that in the video. You can go back and look at that. But we also saw some divergences. And so we're back down to this level here again right now. And so this is getting exciting. I've not bought in yet. I'm watching. I'm waiting. I'll show you what I'm going to be waiting for. By the way, this is not any type of financial advice. I'm not telling what you should do, and I don't know what's going to happen. I'm just sharing with you what I'm looking to do personally. But this is not financial advice for you. Be very, very clear about that. All right, so let's go look at the regular charts now, and I'll show you what I am going to be looking for. This is the S&P 500 daily chart on the right, and we came down to the 200 MA, and I shared in that last video I was concerned that we didn't actually touch the 50 SMA or the 200 SMA. We didn't go below it. I would have preferred if we went below it. And my ideal situation was that we would go up and get into these moving averages here. By the way, that is the 100 SMA and the 50 SMA. So great, we did that. And so I took profits. That's where you want to take some profits. I actually made 70% return, 70% return. And the only reason that I could do that was, first of all, I actually took the trade on the Qs. Well, I took both the SPY and the Qs, but on the Qs made 70%. That's because I bought out of the money call. So much better return than just buying the ETF. Way better. I mean, astronomically better. Okay, so that's one. And I always get out at the first cycle high. So when I'm buying a cycle low, I always get out at the first cycle high and at least take some profits there, usually at least 50%. All right, and then it comes back down. Now, this is where we are right now at this snapshot in time. I'm recording this on a Sunday, so we'll see what happens in the days to come. It's going to take several days to evolve if it turns into be even tradable. So this is awesome. We've come back down, and we've got two things here. We've got the support of this previous low, and we've got work right back into the 200 SMA again. So that's fantastic. Now, if we look over here on the left chart, this is the weekly chart over here on the left. I would love to see us come right smack dab into the 50 SMA, which is the green line, and the 100 SMA, which is the yellow line there. And I'd love to see that provide support. Now, when I say support, I like to actually have it make lower lows. So contrary to classic technical analysis, I don't want higher lows. I want lower lows to buy. That's what I'm looking for. And that's because most people don't trade that. They're afraid of it. And that's exactly what professionals do. We trade the opposite of amateurs, and that's why we get the opposite results of what amateurs get. So basically just looking for this puppy to come down, get below the 200 MA, hopefully get below this low here as well, the price low, if you could see that. And let's see if I can do this better. There we go. So yes, I wanted to get below this low here. I wanted to get below the 50 or the 200 MA. I want my cycle indicator to come down, hook back up to the upside. Let's see if I can get an arrow working here. Oh, look at that. It's actually working. Then I want I'm asking the market for a lot here. I want to see us come back down to these two moving averages on the weekly, get below them a little bit, and then I'm looking for a cycle low over here. So we've got, it's actually I can't explain all of it right now because we don't have time. I'm trying to keep these YouTube videos short. By the way, I give you my cycle indicator if you want to learn about how to use this actually. And the best cycle indicator patterns are the ones that actually put in two lows. Like if we get a higher low here, I call these mini divergences, then that's a much higher probability trade. So I'd want K to come down and then go back up at the support. And we get a cycle low over here as well, all right, and to the daily. So I want the daily and the weekly to make concurrent cycle lows, which is awesome sauce. So that might be asking a lot, and it is, but those are the type of trades that are the higher probability trades where we get things aligning on multiple time frames. So now again, if this does occur, and again, it's kind of like playing chess. So if you're familiar with chess at all, it seems like, it's boring and people are just sitting there staring at the board. But right now it's the market's move on the chessboard. Okay. And this structure that I'm looking at on the charts, this is the positioning of the chess pieces. And so what I'm doing is I'm thinking, well, if the market does this, then I'm going to do that. But if the market does this other thing, then I'm going to do that other thing. And that's what a chess master taught me one time. He said, all chess comes down to that, Barry. He said, while it's the other person's move, as their clock is ticking, you're not just sitting there being bored. You are going through all the possible moves your opponent can make. And you're just running those scenarios through your mind. If she does this, I'll do that. If she does this, then I'll do that. If she does this other thing, then I'll do that other thing. And that's what I'm doing right now. I'm considering all the different possibilities of what the market could do. Don't know, but I'm considering them all. So when the time comes, I am ready to pull the trigger for any given scenario. And that's what trading is. So anyway, that's what I'm looking for. Again, I will not be buying the exchange traded funds. I will not probably be buying stock. I might if there's some great relative strength opportunity there. It's possible. But primarily, I'm looking to buy, again, out of the money calls because that's where the huge returns are if this goes well. And if it doesn't go well, the beautiful thing about options is that the risk is defined. I can't lose more than I actually put on the trade. I can't get a stop. I mean, you can get stops run, but you're still going to get killed as long as you're trading within your size. In other words, you're not risking more than you can afford to lose. Whereas if I was just to buy the ETF or a stock and the market gaps below my stop, then my risk profile is all messed up. And you can't control that. With options, you can control the worst case scenario. And therefore, you can have asymmetrical risk, which is the holy grail of trading. So that's it for today. We'll watch this together. It'll be fun. And put comments down below. Let me know what you think is going to happen. Also, get my cycle indicator. I mentioned that already. I give that to all of my viewers for free. Just go to indicatorwebinar.com. And I call it that because I used to do a live webinar on this. Now it's recorded. And so I not only give you the indicator, which, by the way, is already an indicator on your chart, so that I help you modify and turn it into a different purpose than for what it was intended. And that is to specifically find accurate entries for your trades. I use it on every single trade I take. I literally never take a trade without using this indicator. But I put it into a little bit of a recorded webinar format because I want to teach you how to use it. And it's all there for free. Go get it and enjoy.